A new all-time high for BTC. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The Coindesk Bitcoin price XBX index is at $66,264. There's a bit of profit taking going on at the moment. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Well, earlier today, Bitcoin jumping to record-breaking highs on faster inflation after the U.S. Consumer Price Index jumped 6.2% in the 12 months through October, the highest rate in 3 decades. Core inflation, which strips out the volatile food and energy component, rose 4.6%, the highest pace since 1991. Coindesk's Omkar Gaboli saying the new data could provide a fresh test for Federal Reserve Chair Jerome Powell's characterization of the inflation threat as transitory. The idea that upward price pressure will subside once the global economy has fully reopened from coronavirus-related restrictions and supply chain bottlenecks and other issues are temporary. Bitcoin has rallied 40% in October. The popular narrative that the launch of a Bitcoin futures-based exchange-traded fund would bring in mainstream money, pushing up demand for the cryptocurrency and thus the price. But JP Morgan analysts attributed the rally to rising inflation expectations and Bitcoin's appeal as a hedge against rising prices. Taking a look at our top stories, well, top U.S. crypto exchange Coinbase also reporting third quarter revenue that fell short of expectations and weaker trading volumes than in the second quarter, with the stock plunging over 10% on the announcement. But some Wall Street analysts are taking a longer-term view that backs Coinbase's assessment that cryptocurrency volatility and rising prices in recent months should feed through to an increase in its transacting users and trading volumes in the fourth quarter. All right, joining us now to discuss is Coindesk Director of Data and Indexes, Galen Moore in Boston. Hello there, Galen. So Bitcoin hit an all-time high of at $68,990 this morning. ETH also breaking records at 4,865, and this time it was during North American day trading hours shortly after CPI data was released. What's going on, Galen?
I think, look, if we continue to see sticker shock inflation numbers like that, it's going to be good for Bitcoin. And really, the way in which it's good for Bitcoin is that it tends to seem to drive Bitcoin and the stock market apart. Bitcoin, as we've seen these days, and we've talked about this, Christine, where Bitcoin seems to be moving with growth stocks. On a day like this, you see Bitcoin continuing to do its own thing and maybe even to some extent benefiting from the inflation narrative. Although, as you pointed out earlier, we're about back where we started the U.S. trading day at this point. But, look, stock investors spooked on the damage that inflation can do to earnings and the cost of money. I think it's getting harder and harder to really hang on to this idea that it's just transitory inflation. Whether it is or not, inflation is a really strong narrative right now. People are talking about it at all levels, from the Fed down to people talking about, the price of turkey on a Thanksgiving dinner table. So I think it's a strong narrative, and that can only be beneficial for people who are thinking about Bitcoin in the long term. And on a day like today, you really do see Bitcoin kind of shining as, to some extent, digital gold, right? Distancing itself from the narrative of a risk-on asset that moves with growth stocks.
I kind of cut you off there, but you were talking about the stock market as well. The stocks are falling about 0.5 to 1.5% today. Is there a decoupling going on between Bitcoin, the crypto markets, and the traditional stock markets?
Well, I don't think there has been much of a coupling in the first place. We did see things move a little closer, moving in step a little bit more than they had been, but Bitcoin continues to be a largely uncorrelated asset. And it hasn't become, as much as I think it's kind of raised eyebrows, the extent to which it's become weakly positively correlated with stocks this year. And that always raises the question of, is that going to be a long-term trend? on a day like today, I think you see, Bitcoin proving its worth in a portfolio, which, was where, sort of its place in a portfolio is as an uncorrelated asset and an inflation hedge in the long term.
Let's talk about Coinbase earnings. Didn't turn out as well. Actually, it was kind of expected that it may not turn out too well. Here's a chart, though, on supported custody and trading assets. So what were your thoughts on the results?
Yeah, I feel like the same. I feel like it's sort of Robin Hood all over again. I really don't think Wall Street should have been surprised at the dip in volume and active users. Q3 was a down quarter in volume, and the numbers are there in terms of what people. If people want to see where most of Coinbase's revenue comes from is fees on trading. If you want to see how much trading is happening, that's quite visible. Of course, there's always some question about what percentage of that is large investors who maybe are charged a lower fee, and what percentage is smaller investors who maybe pay a higher percentage. But at the same time, the sort of disappointment here in the near 10% drop in the stock that kind of. So I have to scratch my head. Look, I mean, the most important thing for crypto investors in general is, I think, the increase in institutional trading, or rather the sort of slower decrease, increase in institutional trading as a percentage of Coinbase's business, and also the increase in altcoins, which is highlighted in this chart here. Coinbase added about 25 new cryptocurrencies and crossed 100 in terms of the number they're supporting for trading. So altcoins beyond Bitcoin and Ether are now 59% of their volume. That's up from 50% in Q2 and 40% in Q1. So, look, when you see that share of trading volume from institutions, what they term institutions, which I think are really just large investors, large traders, crossing 70% for the first time, large traders to some extent kept going, even as retail lost steam in Q3. And I think that reinforces that narrative, which has been current. And it seems likely that at least some of that large investor activity is in currencies beyond Bitcoin or Ether. And I think that's critical. I mean, the growth in other, right, the other category, as Coinbase terms it, is too large to be driven by retail alone, to my eye. So, large investors are to some extent participating in these altcoin markets. They're in deeper than just an investment in Bitcoin that they can liquidate to juice returns before end of year. And we're looking at data from a month and a half ago, but I think it's a useful window into how larger investors were positioned coming into the fourth quarter, and what that will mean for how they'll play this run in the second half of the quarter.
So, we saw ETH hit an all-time high just shortly after Bitcoin hit an all-time high. So the story, the one narrative goes, well, ETH just follows what Bitcoin does, or is it because there is an interest in other going beyond Bitcoin?
I think in terms of Ethereum, it has a kind of a natural appeal for investors who are familiar with technology investments, right? That Ethereum has that technology story. Bitcoin, of course, digital gold, very different. I think Alex Kruger was pointing out on Twitter today, people who have hedged against inflation have performed terribly. Investors who have done that have performed terribly unless they bought Bitcoin. So I think two very different stories. Yes, they certainly do. If you want to talk correlations, look at Bitcoin and almost any other crypto, very strong positive correlation in the 0.8, 0.85 range. I think we see times where that drifts apart, right? Where Ethereum is doing its own thing. This year has been one of those stories as I think more and more large investors began to take serious interest in Ethereum. And from there, it's this kind of, red pill rabbit hole type scenario. I don't think it takes long for you to be looking at Ethereum before you start maybe taking, Polkadot or Avalanche or Solana seriously as well.
Maybe even Shiba Inu, but I hope not. But Galen, thank you very much for joining us. Appreciate your insights.
I'm more of a cat person myself. Thank you very much, Christy.
That was Coindesk Director of Data and Indexes, Galen. More coming up, more Bitcoin analysis with crypto wallet provider Blockchain.com. Welcome back. More earnings news coming at you. Mixed results for Marathon Digital, beating third quarter earnings estimates, but missing sales expectations. Nevertheless, the crypto miner pointed out that year over year, third quarter revenue rose over 6,000%, and they mined over 1,200 Bitcoin in the third quarter, a 91% increase from the previous quarter. Marathon Digital stock is down, though, almost 9% today, but shares are up more than 600% year to date. Finally, cryptocurrency broker Voyager Digital saying its loyalty program and customer acquisition efforts are driving a sharp increase in funded accounts, which now number 1 million. That's a 23-fold increase from the end of last year. And crypto wallet provider Blockchain.com reporting over 36 million verified users in over 200 countries after a 3-fold increase in active users in the past 12 months. Joining us now to discuss is Lane Kasselman, Chief Business Officer at Blockchain.com, a crypto wallet provider that accounts for about 1/3 of all Bitcoin transactions. Hello there, Lane. Thanks for joining us. So we have another all-time high kind of day for Bitcoin. Perhaps you could give me some insights on what is driving this surge. Why now?
Well, I don't have a crystal ball, Christine, and I'm happy to be here. But I think there's a couple of things that are really driving what we're seeing in this amazing rally in the price of Bitcoin and Ethereum. There's the macro and there's the micro. Right. So macro, the world has realized crypto is permanent. It's here. It's not going anywhere. It's not just a startup idea that has a brief moment in time. So we're seeing that realized both from regulators, from financial institutions, and certainly from customers moving to the space in droves. But I think there have been a couple of things that have happened in the past week in the micro that really are helping to drive it. I don't know that you can point to any one, but I think between the mayor-elect of New York deciding to take his paycheck in crypto and then being challenged by the mayor of Miami and taking all of his paycheck in crypto over the next year, to the fact that Tim Cook said that he is a holder of crypto as well. There's a lot of things leading the news right now that I think are causing some fever and excitement.
Very positive for Bitcoin. You also have a couple of milestones. Blockchain.com accounts for, as I mentioned earlier, 1/3 of all Bitcoin transactions, hitting $1.5 billion revenue, 8,000% headcount growth, $1 trillion in transactions. Quite, impressive growth that you're seeing. What kind of trends are you seeing in terms of wallet activity geographically versus retail versus institutional?
Yeah, so fortunately at blockchain.com, our business is really split 50-50, half retail and half institutional. So we do get to see both sides of the market very clearly. On the retail side, I think, most of your viewers and the companies you focus on are seeing similar trends and consumers are adopting it quickly. Now, what's interesting, though, is where those consumers are adopting quickly. Of course, there's a lot of excitement in the US and, Western Europe, but we're seeing rapid adoption across Latin America, certainly in Africa and Eastern Europe. The numbers of new users in those markets is just incredible. On the institutional side, it's still being driven largely by crypto native institutions. So market makers, hedge funds, high net worth individuals and VCs, those types of institutions, and of course, crypto hardware companies, they make up the majority of the institutional volume across companies in the sector. And we're starting to see some cracks in that where more traditional TradFi companies are getting into the space.
So speculators on the institutional side, but really interesting about the emerging markets, and it leads to that banking the unbanked narrative in the Bitcoin community. But I wonder if you see any headwinds for Bitcoin coming up, any regulatory or otherwise.
So, I think it's a double-edged sword, right? So on one side, and what I'm referring to is a permanent regulatory framework. So on one side, there are, I think, folks in the crypto community who are very resistant to the idea of any regulation in space because crypto has thrived despite the heavy hand of regulation. But there's others, myself included, and our company, that really believe in a permanent regulatory framework, knowing that it's going to require compromise. But the reality is crypto can't continue to grow without regulators on board. And they're not going to join our community until they feel comfortable that consumers are protected and that there are strong controls in place for anti-money laundering and knowing your customer. So we're just at the beginning of a 2-year period right now in which I think those regulations really get developed across the Western world.
And in some cases, it could be, developing haphazardly. Though there's a $1.2 trillion infrastructure bill that was passed by Congress. It awaits the signature of President Joe Biden. There are a couple of controversial crypto provisions in that, one that basically defines miners as brokers, another that places digital assets in a category with additional tax reporting requirements, basically requires anyone who receives more than $10,000 in cash in one transaction to report the sender's personal information, including their social security number, to the government within 15 days. I wonder if any of these, provisions impact your business.
So I think when thinking about regulation at the U.S. federal level or at the EU level, it's really important not to have a short-sighted or amateur perspective on it. Regulation is forever, and the companies we're building today are forever companies. And so we're just in the first inning of developing regulation. Yes, agreed. Some of the provisions in the infrastructure bill are untenable, but they don't go into effect for a couple of years. And there will be lots of regulation introduced between now and then that has an impact, maybe adjust, maybe correct some of the problems. There'll be stuff the crypto community loves and there'll be stuff that we hate. But the fact of the matter is, this just started and it's never going to end. So we'll need to continue working with regulators to get what we want. Look at every other major industry around the world. It's not as if they get one set of regulations that are created and just sit there permanently forever. They're always getting tweaked. They're always getting changed. They're always evolving. The same thing's going to happen here. And it's uncomfortable because there's always a bit of uncertainty. But that's unfortunately the reality that we are now faced with.
Well, Lane, I know blockchain.com is on the ball. You recently hired Ian Mayer, a Washington, D.C. lobbyist, and he's reporting to you. So I know that you guys are on top of it. Thank you for joining us this afternoon. That was blockchain.com Chief Business Officer Lane Kasselman. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 p.m. Also join us tomorrow morning at 9 a.m. in New York for First Mover. You're watching Coindesk TV.